You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 14th day of June, 2023. Sorry for the late start, but it happens. We do 2 live broadcasts every trading day. First live broadcast is our live training room, which is reserved for members only and those taking their 1-week free trial. When the live training room ends at 11:30 a.m. Eastern, we come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, you could join the afternoon broadcast 2 ways. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, you're done. Every trading day going forward, you'll get an email about an hour before this broadcast starts. And at 12 noon Eastern, all you got to do is click the link in the email, and it will automatically log you into our platform, where you'll have access to the question box so you can ask questions and participate in the discussion. Now, there will be days you're out of the office, away from the desktop, but you still want to join the broadcast live. Okay. There'll also be days where you're busy and you can't join the broadcast live. Okay. In either case, simply point your browser to our YouTube channel, which is youtube.com/CFRN. It's easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. You can scroll back a day, a week, 6 weeks, 6 months, a year, 2 years. You'll see the thread of connectivity and continuity that's woven through each and every daily broadcast. Now, our format's a little different today. We won't be trading live on the TradingView platform today or tomorrow. And Michael is going to join us at 1/4 8 minutes from now, to do a recap of the live training room. And then I will, as always, do a recap of the Logic 247 alerts and the Concierge trade alerts. But first, let's open with a word of prayer, as we do every day. Today's scripture is Matthew 5:16. I'm sharing with you from the Message translation, and our topic this week is Beyond Me, the Secret to Happiness. Here we go, starting with Matthew verse 14. Chapter 5, verse 14. Here's another way to put it. You're here to be light, bringing out the God colors in the world. God is not a secret to be kept. We're going public with this, as public as a city on a hill. If I make you light bearers, you don't think I'm going to hide you under a bucket, do you? I'm putting you on a light stand. Now that I've put you there on a hilltop, on a light stand, shine. Keep open house. Be generous with your lives. By opening up to others, you'll prompt people to open up with God, our generous Father in heaven. So, the secret to happiness. We all remember this from Sunday school, right? This little light of mine, I'm gonna let it shine, right? A lot of us grew up in church singing that song. But what do these words really mean? Well, in that scripture, Matthew 5:16, Jesus said, "The light that shines is the light of our good works." Very few things reach people more than an act of kindness. One simple act of kindness can change someone's day, while also bringing us true happiness. A simple word of encouragement can help someone find hope to persevere through whatever tough times they're going through. A very small group of people can help meet the needs of a struggling community. I want to talk more about that later in the broadcast. And a devoted single man or woman committed to doing good every day, like, Mother Teresa, can start a movement that empowers the lives of an entire generation, thus motivating millions of people around the world. Serving others with the light of God's love is powerful. But that is not where our good deeds stop. When we commit to serving others, our good works bring God glory and inspire others to give their lives to Him. Let's commit to helping others flourish. Let's get involved. Let's give. And let's go. Let's commit to making a difference in the people we come in contact with daily. Allow the light of God's love to shine through your good works. By doing so, you testify of God's love and lead others to Him. This is what living a life beyond yourself is all about. Join me in a word of prayer. Heavenly Father, as we gather before you today, we are reminded of the words we just read, spoken by your Son Jesus in Matthew 5:16. Let your light shine before others, that they may see your good deeds and glorify your Father in heaven. Not glorify you, but glorify God. Lord, we humbly come before you, acknowledging that you are the source of all light and goodness. We thank you for the gift of salvation through your Son Jesus, who is the ultimate light that shines in our lives. Help us, Lord, to be a reflection of that light in a world filled with darkness. Grant us the courage and strength to live our lives in a way that honors and glorifies you. May our every word, action, deed, and attitude be a testament to your love and your grace. Guide us to be a beacon of hope and compassion to those around us. Help us extend a helping hand to the needy, speak words of encouragement to the discouraged, and share the message of salvation with those who are lost. In the face of adversity and challenges, may your light shine through us, bringing comfort, healing, and restoration. May we bring joy to the weary, peace to the troubled, and love to the brokenhearted. Lord, we ask today that you empower us to walk in righteousness and integrity, so that when others look at us, they may see the goodness of your presence in our lives. Let our actions be a testament to your transformative power, drawing others closer to you. And Father, forgive us for the times when we have hidden your light, when fear, doubt, or selfishness has obscured the brightness of your truth. Fill us anew with your Holy Spirit, that we may radiate your love unconditionally, without reservation or compromise. As we strive to let our light shine, may all the glory and honor be given to you, our Heavenly Father. May our lives be a living testimony to your faithfulness and your grace. We pray this in your Son's name, Jesus Christ. And everybody said, Amen.
Amen.
He's here. All right, buddy. Guys, as I said, Michael's coming on early today. We won't be doing the live trading today on TradingView or tomorrow. We'll kick that up again, I guess, on Friday. So Michael's going to do a recap of the live training room right now. When he's done, then I'll come back. We'll go through the numbers from around the world. Then we'll go through the logic alerts, the concierge trade alerts, all that, and much more. Looks good.
All right, here we go. Good afternoon, everyone. Happy Wednesday. Happy Wednesday to you all. Yeah, sorry about the schedule change for today, but well, it's a little bit out of our hands. Well, we didn't have to change the schedule, but we couldn't do the TradingView thing today or tomorrow. Anyways, let me get into what we did this morning. Okay. If you have not taken a free trial with us and you want to take a free trial, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. Click there. When you click there, when you click there, you'll be sent all the information you need to get into the room in the morning. Now it should be 5 consecutive business days of training, right? One thing you want to make sure you do when you sign up for the free trial is go here to trading platforms. Okay, click on the trading platforms and get whatever trading platform that you use. Get it running on your desktop with our indicators on it. All right, you will benefit much more from the trial if you have everything running on your desktop. What you're going to see here is going to be mostly TradingView. You're going to see some DT Pro in there. The trades that I actually place are on DT Pro. The charts are on TradingView for the most part. All right. Make sure you do that. If that takes you more than 5 minutes, don't let that be a stumbling block. All right. Get in touch with us. You all have my number. You can also email support at mytradingiq.com or support@cfrn.net. And you have my phone number. So just get in touch with us if you have any trouble at all setting that up. All right. So now on the spreadsheet, the day started off great, but then, it's FOMC today at 2 o'clock. So things got kind of flat and sideways, as I'll show you here in a few minutes. But today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 14th day of June, 2023. Made 21 ticks in the NQ. We lost 6 ticks in the Russell, and we didn't do anything in gold. And we had 2 break-even trades on the ES. So we ended up only up $75. Now, at one point, we were up $325 a contract. And if you have 6 contracts on, when we got our goal for the day, we're up $1,020. It took 13 minutes and 3 trades to get to $1,020, and we only took 11 trades this morning. All right, so on the month now, we're at $3,987. That's over 10 days, averaging $398 per contract per 2-hour business day. We've now gotten our goal in 110 out of 113 days so far this year. And on the year, that puts us at $53,794. So on the year, we're averaging $476 per day. All right, that is with 1 contract per day. Well, for the morning session, per session, I'll say. All right, I can't really put an hourly time on that. It used to be for 2 hours, but I train in the morning for sometimes an hour, sometimes more, sometimes less. So there's a lot of training going on now. That's why this number is a lot lower than it normally is. Last year it was twice that, almost the whole year. Anyway, if you were to quit trading when you get your goal for the day and you were at 1 contract per month, okay, that's where the rubber meets the road right there. Because I'm not training when I get my goal for the day normally. You quit trading when you get there. Today it would have taken, what was it this morning? 13 minutes and 3 trades to get to $1,020. You would have only had to work 34.58 hours so far this year, and you would have averaged $1,539 per hour during those 13.58 hours. All right, so let's get into the trades. We'll start out with gold. We didn't have a single trade in gold today, and you can pretty much see why. Here is where gold started this morning, and here's where gold ended. You don't see any breakout trends anywhere. There were a few a few spots in here where it gave an arrow, but I overruled that because right here you can see that the long-term trend is just not there. All right. It was looking at some minuscule separation in here probably when it gave this one, and right back here probably when it gave that one, and right in here probably when it gave that one. But I just said there's no reason to trade in here, and there's still no reason to trade. We've been in a range all morning and just stuff there. Now yesterday we had huge range on the gold, right in here. That's not yesterday. Here, all the way to yesterday. If you go all the way back to the beginning of yesterday, we had a lot of range on the gold yesterday, and we had some good opportunity in the gold yesterday. That's why we're up 29 ticks on it. But today, things are just flattened right out. All right, and that was what gold was like today. Still no opportunity to trade there. No reason to trade there. All right, the Russell again. We're negative on the Russell today. We started out positive on the Russell. We're plus 4 ticks on our very first trade on the Russell. And you can see all these new trade zones that triggered in there all during the morning session. So it was clearly not easy to trade the Russell today. Our very first trade was right here. We picked up 4 ticks on this one. And then we didn't do anything else all through here. All the way over to here. We took a long trade right in here and it stopped us out. That put us at -6. We took a short trade right here and ended up with a break even on it. And then we didn't do anything else. See, the market's just flattened right out on us. In here, as we got into the break right here, there was one trade right here after we broke out of this to the downside, out of this range bound stuff. We had one over here after this actually broke it out of the range on the long side. And so if you would have taken this, it would have been just enough to get the stop to break even. It looks like the entry was exactly right at 17.1. It ran up to 17.6. So just enough to get the stop to break even. So it would have been a break-even trade. Nothing here. Long-term duration is flat. Then there was a decent trade here, followed up by a stop out right there. If you know, I wouldn't have done this because it didn't pull back deep enough. It would have had to hit the ribbon for me. So I wouldn't have done any of these right here. You'd still have nothing there on the Russell. And that is where I stand with that. Now the ES, we had a couple of trades on the ES right here. They were both break-even trades. Like this one here was actually a ribbon trade. It wasn't this arrow right here. It was off the ribbon right here. And this was the green arrow trade right here. You can see the whole ES right here. This is our whole morning with the ES. So there wasn't anything to work with today. You know, each one of these trades, if I stayed in them, if I hadn't trailed my stop and followed the risk management strategies, I would have gotten some sort of profit out of each one of those. But the way it turned out, I ended up with break-evens on both. All right, now the NQ, we were up and down in the NQ a little bit today. We had a couple of stop outs, but we started out with a couple of 30-tick trades before we had those couple of stop outs. All right, so we got in here. Our very first trade on the NQ was right here. We picked up 30 ticks on that. Then the next one, somewhere in there, we picked up 1 tick. Somewhere in here, picked up 1 tick. I don't remember exactly where it was. This was a ribbon trade right here. I didn't take the arrow. I took the ribbon trade right here to get those 30. And somewhere in here, there was 1 tick to get us to 31. And then we had another 30 tick win right there to get us to 61. Then we stopped out there. It brought us down to 41. And then we didn't do anything till here. We had another break-even trade. And you can see I was going through the leg lengths in here, showing leg lengths and how this failed to finish this leg length. And the pullback length was bigger than the prior pullback length. That is right here. This was the prior pullback length. And the pullback length was bigger than the prior pullback length, and that caused a change of direction. When we took this arrow right here off the ribbon and changed direction, it stopped us out again. So we went from 61 to 41 down to 21 right there. Then I didn't get that trade. And all this happened right at the end of the session. All right, so right in here, we're waiting for it to pull back and maybe give us another trade, and it didn't. I was looking for a green arrow off of the ribbon after this direction change right here. Any one of these black arrows would have been a nice trade, but I missed them all. During the break, it was a green arrow here that worked, a green arrow here that worked, and a green arrow here that worked, and a green arrow here that would have stopped you out. So 1, 2, 3 that worked well, and 1 that would have stopped you out. Every one of these would have been 30 tick wins for 90 total and a stop out for -20, so 70 total. change of direction, I would have been looking for a pullback down to the ribbon like this one right here is what I've been waiting for. But these black arrows lately on the direction change with the NQ have been working out just fine. But we ended up with plus 21 on the NQ after being up to plus 61. We ended up with plus 21 on the morning session. Okay, so that is how everything went this morning. If anybody's got any questions about anything, you can type them right into the question box right now. I see a lot of people showed up here after I got started. We're going to do this again tomorrow. I'll start early again tomorrow with 12:15 tomorrow, and then on Friday we're going to go back to the regular thing where I come in here at 12:45, just so you guys know. And all right, so yeah, back here to the spreadsheet now. Right, so on the spreadsheet, we're only up $75 today. We're up 21 ticks in the NQ, down from 61. We're down 6 ticks on the Russell, down from 4. And we're break even here on the gold, didn't take any trades, and break even here on the ES with 2 break evens. Puts us at 75. But today it took 13 minutes and 3 trades to get the goal for the day. At that point, we're up $1,020, and we took a total of 11 trades. So on the month, we're now $3,987 over 10 days, averaging $398 per contract per 2-hour business day. And on the year now, we're at $53,794. So we've gotten our goal 110 out of 113 days so far this year. And in the room on the year, we're averaging $476 per session. Okay. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, then you would have only had to work 34.58 hours so far this year, and you would have averaged $1,539 per hour for those 34.5 hours. All right, good stuff. Good income if you can get it and do it every day. Now, if you've not taken a free trial and you want to, go here to mytradingiq.com, and right here, sign for your free 5-day training. Now, 9:30 to 11:30. Click on that and fill out the form. Once you fill out the form, you've sent all the information that you need to get into the room in the morning. Now, you should check out the trade rules. These are the rules. These rules right here are for TradingView. Right? Those are the entry criteria for TradingView. The risk management, the trade exit, those are the same across all platforms. These are the entry criteria for DT Pro and NinjaTrader right here. Okay, but the risk management and trade exit are the same across all platforms. All trades have an entry, a risk management, and exit. These are TradingView entries. All right. I did create, trying to find it. Did create a screenshot. You guys can have a picture of this if you want to. That has the rules for the entry with the green arrow right here. This is the TradingView rules. 1, you have a lower swing pivot. 2, the long-term trends are bearish and separated right here. 3, price pulls back up and touches the ribbon. Any line in the ribbon will do. And 4, down here in the slingshot, the lead line or the black line drops out of the overbought into the middle. Right? When all that happens, get that down, close off the ribbon, you're going to get a green arrow. The green arrow is the highest probability trade. Those are the rules. You guys want to take a screenshot of that? Feel free right now. It will eventually be posted in a lot of other places, so you don't really have to. But those are the rules for the trade setups, okay? Yeah. So
and while that chart happened to be gold, the same rules apply to every market, whether it's the S&P, the Dow, the Russell, Amazon, Walmart, Bitcoin, British pound.
That's true. You know what? I might go make this again. I might go make this again and take off the actual symbol because we don't have any numbers or times down here. All you have are the rules. I may go do that again.
Okay.
That's a good idea, Dwayne.
That's the key, guys. We don't teach you how to trade a specific market. We teach you how to trade, which is a valuable life skill. Because once you learn how to trade, nobody can ever take it away from you. And you'll never again need somebody to tell you when to get in and when to get out. So you can work anywhere, live anywhere, play anywhere, and earn your daily income, hopefully in less than an hour.
Hopefully. Right, and this is from today's lesson plan. So that was, save that too. All right, well, that's it, Dwayne. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park.
All righty. And here it comes. There it is.
There it is. We can
Recap
see
of the recap of the morning session.
Today it took 13 minutes and 3 trades to get to $1,020.
Were there any stop outs in those 3 trades?
Not today.
Not today?
No.
Okay.
Not today. Nope. There was a small gain, a big gain, and a break even.
There you go.
Today. Yesterday there were 4 stop outs. To get to the same number, there were 4 stop outs, but it took considerably longer and more trades because of the 4 stop outs.
That's how you get your goal for the day, guys, on a daily basis, is you trade until you get your goal. Okay. Now, if you get stopped out, 3 times in a row, then something's amiss. Maybe you just need to take a break, get away from the screens, maybe look at a larger time frame to get things in perspective. And anytime a member has 2 days in a row where they do not reach their goal for the day, you should immediately come out of your live account, go back to your demo account. It's not a walk of shame. It's a smart business decision. And immediately book a one-on-one mentoring session with myself or Michael so we can help you figure out, what's going on and get you back on the right track. That's how we do it, right?
That is how we do it, again and again.
Okay. All right, guys. I am going to now give you the numbers from around the world. Then I'm going to announce the tweet of the day. Then we're going to walk through each and every one of the alerts. We're going to look at the daily chart, all the stuff we do each and every day. So, starting here in the U.S., with the cash markets, or the indices as they're called, keep in mind we got a Fed announcement coming at 2. That'll create some volatility. Then there'll be a press conference at 2:30. That's where the real volatility may come in, because that's when, if Jerome pauses raising rates today, then of course every question from the audience is going to be about, are you pausing just for one session, for one meeting, or do you plan to pause longer, or what's up? And that can create some super volatility. Right now, the Dow is down 96 points. The NASDAQ is up 54 points. The S&P 500 is up 12. And the Russell 2000, our man in the street, is down almost 6 points. In the commodity basket, crude oil down 13 cents, trading $69.29 last. Gold up $10.50, trading $19.69 last. Silver up 31 cents, trading $24.13 last. That's a gain of over 1.25%. In the Asian markets at the close, Nikkei up 483 points, 1.5%. The Shanghai dropped 5 points. The Hang Seng fell 113. And in the European markets at the close, FTSE up 8, the DAX up 80, CAC up 37. So that gave us a mixed day in Asia. It was a green day for the UK. Not a big green day, but green nonetheless. And so far, it's a mixed Radio Wednesday Fed day here in the US of A. We like to see the 4 major indices all the same color, either red or all green, because as futures traders, we can be long or short and long again, all in the same hour, if that's what the chart in front of us tells us to do. So we're divided with the Dow and the Russell in the red, the NASDAQ and the S&P in the green. I can only encourage you, I can't make you do anything, but I can encourage you, when the Fed announcement comes out, please be flat and remain flat until press conference is over and the market returns to its normal rhythm. Okay? Just saying that for your protection. Trading news events, to me, is like gambling, because I got gambling type results when I tried trading the news. Once upon a time, good news meant the markets went higher and bad news meant the markets went lower, but that's not always the case these days. So I refrain from trading during that time period whenever there's a major news event, and the Fed announcement is the granddaddy of all econ reports. Whether you agree with it or not, let the market do its thing, enjoy the action, grab a bag of popcorn, and now that's not corn pop, but popcorn. Some of you will get that reference, and some of you won't. Okay, so there you have it. Numbers for the day from around the world. And now, let us reveal our tweet of the day. And as unbelievable as it might seem, CNN won 2 days in a row. Former President Donald Trump made numerous false and misleading. Now, I don't make the news, I just share the news. Former President Donald Trump made numerous false and misleading claims in a speech he delivered following his arraignment in Miami federal court. Here is a fact check of some of the things he said. So let's just see what lies he told. Let's get rid of this. Trump, who pleaded not guilty, has been persistently dishonest about matters related to the indictment. Here is a fact check of some of the things he said in the Tuesday night address from his golf club in Bedminster, New Jersey. Trump claimed that the documents he had at Mar-a-Lago were his own documents and that he had had every right to keep them under the Presidential Records Act. Okay, according to CNN and their fact checkers, this is false. Presidential Records Act says that all presidential records belonging to the federal government the moment the president leaves office. By having official records at Mar-a-Lago after his presidency, Trump was in clear contravention of that law. Now, they don't talk about the fact that Joe Biden also had documents in numerous places, including the garage where he parks his beloved classic Corvette. The key sentence from the Presidential Records Act is unequivocal. So, should that not be applied to everyone? Or is this selective political prosecution? Jason Barron, former director of litigation at NARA, said in a Sunday email, under the Presidential Records Act, not a single document pertaining to the official business of the White House, classified or unclassified, should have been carted off to Mar-a-Lago. Well, I guess the same should be said that President Biden, Vice President Biden, took documents. Now, are they going to say that he's not subject to it because he was only vice president? Well, that makes it even more heinous, now doesn't it? We've got the records. It's blatantly obvious, but Trump's guilty. Current president, not guilty. Okay. Nor was the previous Secretary of State, Ms. Clinton. Trump repeated his frequent claim that according to the Presidential Records Act, which was a big deal, I was supposed to negotiate with the NARA, the National Archives and Records Administration, about the return of official documents after his presidency. Fact checker says, false. Presidential Records Act says that the moment a president leaves office, NARA gets custody and control of all presidential records from his administration. Nothing in the law says there should be a negotiation between a former president and NARA over a former president's return of presidential documents, much less that there should have been a months-long battle after NARA first contacted Trump's team in 2021 to try to get some of the records that had not been handed over at the end of his presidency. Well, President Trump's attorneys have said that they fully cooperated in every way possible. In every way possible. But you, the American voter, the American taxpayer, you have to make your own decision. Do we have a two-tiered system of justice where selective prosecution is allowed? Or is it true that no one, no matter what your last name is above the law? Something to think about. Trump served up a series of untrue claims about the probe itself, falsely accusing investigators of repeatedly taking steps that were either illegal or violated the Constitution. He said last year's FBI search of his Mar-a-Lago home was unconstitutional. Investigators snapped a photo of some of the classified documents they found, and in Trump's retelling, the FBI released the picture illegally to the press. He also claimed Smith's team lawlessly pierced his attorney-client privilege by obtaining testimony and written evidence from his former lawyer, Evan Corcoran. Fact check. Trump's wrong on all three fronts. The Mar-a-Lago search wasn't unconstitutional. It was authorized by a judge who determined the prosecutors cleared the legal bar to conduct a search. The FBI didn't release the photo illegally. They included it in a court filing in a lawsuit that Trump himself initiated. And finally, prosecutors got a judge's approval to lawfully obtain testimony from Corcoran. Trump's attorneys will likely mount additional challenges to the Corcoran evidence, but at this point in the case, there's no evidence it was improperly obtained by Smith. The special counsel's team convinced the chief judge of the D.C. federal court to order Corcoran to testify at the grand jury, arguing that attorney-client privilege didn't apply because Trump was trying to commit a crime through Corcoran. I wonder if they'll be able to prove that in a court of law. Trump claimed that he is being charged under the Espionage Act for taking his own presidential documents, even though just about every other president has done the same. Yeah, even Jimmy Carter, nicest guy in the world, right? But he didn't do anything that Trump didn't do, as far as I know. Trump has previously made a more specific version of his claim, declaring that former presidents, including Barack Obama, George Bush, the other George Bush, had all taken home millions of records. In reality, NARA was granted custody of their presidential records as soon as these presidents left office, as required by the Presidential Records Act, and it was NARA, not the presidents, that moved those documents out of the nation's capital to NARA-managed temporary archival facilities like Joe Biden's garage, where their permanent presidential libraries would be built. Trump baselessly, now that's an opinion, accused special counsel Jack Smith of political bias. Most Americans, if you've read the polls, agree with this. This prosecution is politically motivated. Saying Smith does political hit jobs for a living and that he's a raging and uncontrolled Trump-ater, as is his wife. Well, the fact checker says there's no public evidence that Smith is politically biased or a left-wing zealot. Why don't you Google him up and see for yourself? In fact, Smith was involved in previous Justice Department prosecutions against high-profile Democratic office holders, which Trump even mentioned in his speech. CNN senior legal analyst said earlier Tuesday that the record does not at all bear out this notion that Jack Smith is partisan or Democratic leaning, pointing out that Smith is a career official. Does that mean politician? Who has served under Democratic and Republican administrations since 1994. And of course, you can read all the rest of this yourself. Biden's supposed role in the indictment. Trump began the speech with an accusation that President Joe Biden is responsible for his indictment. Now, I disagree here. I don't think President Joe Biden is capable of being responsible. Saying that the president had his top political opponent arrested on fake and fabricated charges in the middle of a presidential election. Those who control the Joe bot are the ones guilty of this. There's no sign, according to the fact checkers, that Biden has been involved in the decision to criminally investigate or prosecute Trump. Ordinary citizens on a Florida grand jury voted to indict Trump, and the prosecution is led by a special counsel, Jack Smith. Smith was appointed in November 2022 by, oh my goodness, Attorney General Merrick Garland, a Biden appointee. But that is not proof that Biden was involved in the prosecution effort. They actually said that out loud, or posted it out loud, but that is not proof. Now, again, you're the American voter and taxpayer. Make your own decision. And it goes on, and it goes on. Oh, Trump said he was the victim of a politicized Justice Department because he was indicted while his 2016 opponent, Hillary Clinton, didn't face charges for her own classified documents scandal stemming from her use of a private email server to conduct government business while she was Secretary of State. Now, we know that is a fact. Nobody disputes that this is a fact. He claimed she had a deliberate intention of violating records retention laws and that there's never been obstruction as grave as what she did to undermine her own FBI probe in 2015-2016. He also said Hillary Clinton broke the law and she didn't get indicted because the FBI and Justice Department protected her, although there isn't any evidence that their decision-making was tainted by politics. This is a fact, okay? Check it. She destroyed 33,000 emails. She wiped her hard drives with bleach bit or bit bleach, whatever it's called. She instructed her aides to destroy all of their BlackBerries with hammers. Is that not obstruction of justice? Oh, we're about to find out about this $5 million bribery. business. So then you get down to all the clickbait. But I encourage you, if you go on Twitter and just search Twitter for @CNN, quickly find this article. And as I noted, looks like you won our tweet of the day 2 days in a row. The winner will be announced on our daily podcast. And some other responses were, Putin arrests political opponents. No, that's authoritarianism. Democrats arrest political opponents. Wow, I love democracy. Listen, everything you people say should be fact-checked. The only way to get a job on your show is to fail a lie detector test. What about Burisma? Fact check. You lied for 6 years about Russian collusion to unseat a sitting president. You have zero credibility to tell me what is and isn't true. He told America just the truth, 100%. Is it time for President Biden to be impeached? Well, see, Congress is certainly heading in that direction. How many recent mainstream media hoaxes did you fall for? Russian collusion? Trump called neo-Nazis fine people. Jesse Smollett. Remember the guy who arranged his own hanging in the middle of the night, going for a sandwich in Chicago in probably 0-degree weather. Bubba Wallace's garage pull, which the media turned into a noose, as you know. Covington kids, who were vindicated. The Governor Whitmer kidnapping plot, sad. Kavanaugh rape, sad. Trump P-tape, sad. COVID lab leak was a conspiracy theory. Well, we now know that it wasn't. Border agents whipped migrants. No, they whipped their horses the way you do when you're riding a horse. Maybe these people had never ridden a horse. Trump saved nuclear secrets at Mar-a-Lago. The Steele dossier, paid for by Hillary Clinton. Russian bounties on U.S. soldiers in Afghanistan. Trump said drinking bleach would fight COVID. No, he never, ever said that. Muslim travel ban, Hunter Biden's laptop was Russian disinformation. Oh my goodness, the list goes on. But the question is, how many of these mainstream media hoaxes did you fall for? Everyone listed here has been disproved. Oh, Officer Sicknick on the January 6th insurrection was murdered by protesters. But he wasn't. He passed the next day. Coroner's report, if I'm not mistaken, is public information. So there you have it, tweet of the day. My pleasure to bring it to you good folks. Okay, now, where do we normally go at this time of day? Roughly, give or take. We go to the Logic 247 recap. Let's do it. You're welcome. Okay. Logic 247 is our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, though. It's crude, it's gold, the euro, bonds. We even added soybeans. Now, since we launched Logic 247 254 weeks ago, we've now issued over 14,000 I think it's 500 individual handcrafted alerts. I even put a funny post out last night, I think in the discussion group, about we're approaching our 15,000th alert. And many of you may be planning a celebration. Of course, cards and letters are always welcome, but don't send us a cash gift or a gift with monetary value. Instead, the post said, donate that to your favorite local charity. Now, the markets open Sunday night at 6 p.m. Eastern, and they remain open until Friday afternoon at 5 p.m. Eastern. Since the markets open Sunday night, now today's only Wednesday, we've issued 55 alerts total, 10 never triggered. We're still waiting on the outcome of 8. So we've had 37 actionable alerts, of which 3 or 8% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on a process that I teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Now, each logic alert has an entry, an initial target, and in many cases, multiple targets, and then there's a final trade to target. So from the entry price to the final trade to price, whether it's a long or a short, you can quickly do the math and see what the potential profit is in the alert. Now, it could be $500, could be $1,000, could be $2,000. Doesn't matter. The maximum you risk is $300 per contract. Now, what if the alert doesn't have $300 of potential profit? That's where your smaller time frame comes in, because if the alert itself only has $200 of potential profit, you can't risk more than $200. I mean, you can. That's bad math, bad science. Let's say an alert has $1,000 of potential profit, but you know you're going to get out at the initial target, which is enough to earn you $100 per contract per day. If you know that going into the trade, then you should not risk more than that. Okay? You can risk up to $300 if you plan to stay in the trade long enough to hit $300 profit. But by using that smaller time frame, you can quite often risk a lot less. See, in the S&P, for instance, at $50 a point, $300 would be a 6-point stop loss. My bracket is set up 3 by 3. 3-point target, 3-point risk, as people in mentoring sessions have seen. I encourage you to use a bracket and always use a hard physical stop. That nonsense out there about, oh, if you put on a hard stop, they, whoever they are, will run your stops. Right. A major institution that has an account in the hundreds of millions and billions of dollars, they're going to spend hundreds of thousands of dollars to move price down to take out your 1 contract stop or your 10 contract stop. When you look at it through an objective lens, that's nonsense. Okay? Nobody's trying to run your stop. The only people who have the power to run your stop, they already have accounts denominated, the institutions, in hundreds of millions and billions of dollars. They don't even know you exist. They could care less about unless you become a competitor to them. If you become an institution and you have an account size as big as theirs, okay, now they're paying attention to you. But beyond that, they could care less what you do. Now, I know when you get stopped out of the tick, it sure seems like something's rigged somewhere, but it's not. Your eyes saw the exact spot where price was likely to retrace to, and that's where you put your stop. On an alert, I do now in the live training room where Michael is teaching you the strategy, putting on, taking off trades live in real time, explaining every move he makes, every trade he takes, and the rule behind it. He uses aggressive risk management, and you should learn that. Once he has 4 ticks in profit, he moves a stop to break even. I think on the NQ, it's when he has 8 ticks in profit that he moves a stop to break even. Here's what I've learned. If you're going to stay in a trade longer than just a couple minutes, you're trading an alert and you're, going for the second target or the third target or the fourth target or the final target, there is a extremely high probability that price is going to revisit the entry price before it finally hits the final trade to target price. Why? Because important prices and important areas are almost always tested. And if the price you entered the trade, if there's a valid reason for that, that makes that an important price, important area. So, man, I hear from people all the time, gee, it seems like I always get stopped out. I always get stopped out. I always get stopped out. Okay? Learn what Michael teaches you. Get good at that. Okay? Then I'll teach you how to use market structure to set your stop when you're ready. I had just such a mentoring session yesterday, and I got quite a nice report this morning. Oh, I don't know if I finished that. I think I did. So far, 8% of the alerts have been stopped out based on the risk profile I just explained. Over the last 254 weeks, 14,500 plus alerts, we've averaged 20% or less of the alerts being stopped out based on that risk file. Now that's the logic alerts. They come out around the clock because futures trade around the clock, and we have traders around the globe. Our day session is their night session and vice versa. So a logic alert can come out at 2 a.m. or 2 p.m. The concierge trade alerts, well, they're a little bit different. Just wanted to share real quick. Mentoring session I had yesterday. Boom. Goal for the day. If you haven't booked a mentoring session, you might want to do it. I'll try to help you any way I can. And as a lifetime member, as a passport holder, that's your all access pass to everything we do, everything we've ever done, and whatever we do in the future. It includes not only lifetime access to the live training room, but lifetime access to the weekly trading zones, unlimited one-on-one private mentoring. The strategy you learn is fluid across all markets and time frames. The indicators you own for life are fluid across all markets and time frames. As a passport holder, you get the Logic 247 alerts, you get the concierge trade alerts, And you get to be in the members only Thursday night workshop. And you also have access to previous workshops. We have a special channel for that in Telegram. As soon as the Thursday night workshop is over, of course, we record it, and we put it in the weekly workshop channel on Telegram, which only members have access to. So if you miss a Thursday night workshop, you can go back and watch it. You can watch the week before. You can go back a couple months, and you can, whatever you want to do. Just like with YouTube. We broadcast live every day on our YouTube channel, but we also archive every daily broadcast. And as I mentioned earlier, there's over 2,200 daily episodes archived so that you can scroll back a week, 6 weeks, 6 months, 2 years, even more. Pick days at random, okay? Anybody can say and do anything today. Anybody can have a lucky day today. But I highly encourage you, whether you're on the trial, member, or just kicking the tires on the whole thing. The information is there. All you got to do is take the time to go have a look. Just scroll back, youtube.com/CFRN. And pick days at random. You don't have to watch the whole broadcast, but make sure you fast forward to the part where the recap is done of the live training room for that day, and also where the recap is done, the logic alerts and the concierge trade alerts for that day. All right. Speaking of the concierge trade alerts, I did pretty good last night considering I got them out much earlier than I have the last couple days. Last night I got them out to members and trial members at 6:45 p.m. Eastern. Now this broadcast is open to the public. So if you're not a member or a trial member, you didn't get these numbers last night at 6:45 p.m. Eastern. So I encourage you to take a screenshot because we're going to walk through every one of them quickly. But we'll walk through every one of them. So I just want you to know that every member, every trial member had these numbers 6:45 last night. Now, what do you do with the numbers when they come out? Number one, only focus on the alerts for the markets that you actually trade, right? That makes sense. We use the ES as an example as that seems to be the most popular. First thing you do when this report is posted for members and trial members is you make note of where price is at this time on your 30-minute chart. It's always going to be between these two numbers. Then draw a line in the sand at the long target and a line in the sand at the short target. When we go to the charts, you'll see what my lines in the sand look like. You can make yours look like however you want them to look. But they're great visual cues to help you stay on the right side of the street. Now, if price gets above the 30-minute BBC, once the numbers are out, or if it's already above the 30-minute BBC, it's attempting to reach the long target. If price gets below or is already below the 30-minute BBC, it's attempting to reach the short target. Pretty simple. You still got to look left to spot potential obstacles, previous swing highs or swing lows, which can become current support or resistance. And you have to learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. We first published the zones for our members December 14th of 2009. And we've published them every week since. That's a long time. They come out Monday morning at 6:15 a.m. Eastern for members and trial members. Once you really understand how price behaves at a weekly zone, zones will become one of the most important tools in your trading toolbox. You'll see the zones on my charts when we go there, and you'll see how important they are. Now, I made this all very simple, right? But it's only simple if you can resist the urge to make it more complicated. You know, there's always that thing in the back of your mind. Oh man, if I just add one more thing, just one more indicator, one more oscillator, one more tip sheet, whatever, you know, then I'll be successful. Then I'll never get stopped out again. I beseech you, my brethren, stop chasing the Holy Grail, because it doesn't exist. It can't exist. It would defy the laws of science, physics, and even God. Nobody knows what's going to happen next in the market. Nobody. Because what happens next in the market is a reflection of what millions of traders around the world collectively do. So there's no way to predict that. But with our strategy and indicators, you can know with an incredible degree of certainty what the next high probability move is. That's why after 14,500 plus Logic 247 alerts, we've averaged 20% or less being stopped out based on the risk profile that I explained. So now we do what we always do. We go to the daily chart. We have, since yesterday, at this time, put in a new high. So what do we have to do? We have to take this top fib line. Now, okay, if you grab it with the white thing, it's going to move the whole framework. But if you hover over that little button, and how do I get the button? I just click the line. Okay. Hover over it until it turns green. Hold down the left mouse button and drag up to the current high. Okay. Now, the low that we drew from, been in a downtrend over a year. The low of the downtrend was put in October 13th. Now that is never going to change. The October 13th low will always be the October 13th low. Now, as price climbs, we had to adjust the line, the upper line, here, here, and here, and here. Now we just did it here. What's today's high? 44.39.5. So we're 1 point off. It's difficult to get it any closer, so it's close enough for me. Today's high, 44.39.50. So what have we done 2 days in a row? We've spiked the 50% fib extension. Up here's the 62% fib extension. The green line is called the BVC. Stands for bull bear cross. When price crosses above it, we're bullish. Price crosses below it, we're bearish. Above it, bullish. Bearish. Bullish. And when you hear me refer to the perfect stack, okay, that means you've got price, the step line, blue and climbing, BBC, bull bear cross. Now, the red and blue indicators called the CFMA1. I just refer to it as blue and climbing, red and falling. One is bullish, the other bearish. One represents support, the other represents resistance. And the black line is called the step line. And as we go to the 30-minute charts, I will show you how I use the step line. I use it the same way here. What I'm waiting for is to see the step line. See how it's like right on top of blue and climbing? Okay, I'm waiting for it to make a definitive move. Cross from the left side to the right side, blue and climbing. Why? Well, when the step line crosses red and falling, price is probably going to pull back to the BBC. When the step line crosses blue and climbing, we're probably going to pull back to the BBC. Now, of course, on a 30-minute chart, you see that a lot more often. You're right here, step line crossed, pull back to the BBC. The pullback to the BBC holds more often than it doesn't. I'll clearly show you that on the 30-minute chart, but you can see it right here. Now, you might be asking, now look how we're well off the high of the day. We spiked the 50% fib extension, but we're way off the high of the day. Remember, this is a daily candle. Whatever market you trade, whether it's the S&P or crude or gold or Amazon or Walmart or Bitcoin or the British pound, the Spider ETF or any ETF, price flows the same across all markets and all time frames. Institutional traders are the ones who move price. Their account size, as I talked about earlier. A typical retail trader has an account in the thousands or tens of thousands of dollars. So, spending 2 minutes looking at the daily chart of whatever market you trade. Like if you looked at this earlier, institutions were buying, 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 buying. And then they hit the pause button. So if the institutional traders who hit the pause button have lost their bullish nature, then on my 30-minute chart, my thinking is going to be different than if we were at the high of the day right now. Ran up. I'm sure there was some profit taking. Okay. But is it more than just profit taking? Well, we'll find out. Now, this afternoon is going to be a very unusual afternoon compared to most days because we had announcements at 2 o'clock and then the press conference is at 2:30. And again, I'm going to encourage you one last time. Enjoy the action if you want to watch the charts. Keep your hand off the mouse. Let the dust settle. Let the market return to its normal rhythm. Then step in. Now, how did we get these extensions? We used the same 13th century math that's used for Fibonacci retracements. Except instead of indicating areas where the market is most likely to find support, now we've recently rolled to the U contract, okay? And we've had to move this, all right? So since we've had to move this line higher, okay, these pullbacks over here don't have the same meaning. I mean, you can see at the 50%, we consolidated, and then we ran up to the 24 and found resistance. Didn't quite make it back to the 38. Fibs are an area, but they're not, and fib extensions, they're not proprietary. Institutional traders are looking at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. Do the institutional traders have fibs on their chart? Better believe it. Do they have fib extensions? Better believe it. And the fact that there was such a bullish surge this morning, I think there was some high impact news either at 8:30 or 10 o'clock. I haven't actually looked at my news thing for the day. But something has changed, hasn't it? The high of the day at 44.39.50. We're now at 44.20.75. There's the high of the session. Are institutions changing their thinking? I don't know. Looks like it, huh? So, all alerts, logic, and concierge are created with the 30-minute chart. I call it my roadmap. It tells me which direction I should be trading in, and then I use my 10-tick range chart to help me enter and determine my risk using market structure. Vertical line separates today, Wednesday, from Tuesday all the way back to Monday. Now, when price rallies up to a zone, we expect resistance. Price drops to a zone, we expect support. This zone is 43.48/49, and the low is 51.25. Okay, so we missed it by a few ticks. Just as fibs are an area, zones are an area. Okay, now here's that perfect stack. Price, step line, blue and climbing, BBC. Now the step line crossed, but instead of getting an immediate pullback to the BBC, we pulled back to the zone, 43.86/87. When the market finds support, it's going to go look for resistance again. When it finds resistance, it's going to go look for support. Where did it find it? At the zone. Did we spike the zone? Yeah. This was a huge red candle, okay? All the way down here. This was off the 8:30 high impact news we had yesterday. So the candle opened, dropped, spiked the zone, but the zone held as support because at the end of the 30-minute period, price was way up here. Candle opens, down we go, find support. Now we go look for resistance. Get a retracement back to the BBC. The pullback holds more often than not. Up close. By the open of the next candle. To go for the day. Now, keep in mind, I'm incorporating my 10-tick range chart to help me time my entries. The 30-minute chart shows me where the window of opportunity is, my 10-tick range, because if you just use the range chart, you're going to get tunnel vision, okay? You're going to lose touch with the big picture. So we're below the BBC. There's still 8 minutes left in the life of this candle. So the pullback held, and then we ran up and hit the target. And then the pullback held, and we ran up and hit the target. We know, even though the pullback holds more often than it doesn't, we know eventually price will trade through the BBC. That's what keeps markets fluid, tradable. If you look down here at my slingshot, you'll notice that the cycle is red and below the bias line. And the green line is in the process of dropping below. Now I've got the same slingshot on my 10-tick range chart. It just moves a lot quicker because these are 30-minute candles, okay? So, if I wanted to go short, what would I do? Well, 44.17 to 44.15, that looks like a pretty good window of opportunity. Although, I must add, you really should wait for price to pull away from the BBC to confirm that we're now looking for short trades instead of long trades. Price is above the BBC, every alert's going to be long. Once price is below the BBC, every logic alert is going to be a short. So that's close to 41.17, and that's close to 41.15. Now that's 2 points. That rectangle right there represents 2 points. If we trade through this window, that's your goal for the day. That pays $100 per contract traded. Once you've earned the right to trade 5 contracts, that same little space will pay you $500. If price trades all the way through, okay, all the way through the window. At 10 contracts, you get $1,000. 44.17, 44.15. Now, in order for that to happen, of course, price has to take out the current low. There's still 5 minutes left in the life of this candle. So, if you're new, this might be a little premature. You might want to wait for price to take out this low, which lines up with all these lows, and then trade this area down here. 44.07 to 44.05. Go for the day. You're done. Put the mouse away. Go pursue life. Spend time with your family. Do the things God created you to do. Now, if price takes out this low, expect it to go to this low, which happens to be the short target. And if we get through the short target and look left, there's no obstacles. So 44, 43, 95. Let's be real conservative. 43.92 to 43.90. Bang. Go for the day. All right. We'll come back and revisit this. But did we hit our long target? Yes. Yes. And could we, based on the wild volatility we're going to have this afternoon, could we hit the short target? Yes. But remember, you really should refrain trading. Still got blue and climbing. When the next 30-minute candle opens, blue and climbing will probably turn to red and falling. Like this. Okay? And then that becomes resistance. The Dow. Here's where the market opened. Okay? During the life of this candle, remember this is from 6 to 6:30. The Wednesday session started Tuesday night at 6 p.m. Eastern here in the U.S. Okay? This was the opening candle. CTAs were published at 6:45. So we knew to expect support here because when price moves up to a zone, expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. And so we know that we have to get below this weekly trading zone before we can even think about the short target, right? Makes sense? Now, as we consolidated sideways for hours, red and falling turned to blue and climbing. And then the stack. Price, step line, blue and climbing. See? This candle opened at 464, ran up to 516. That's about $200 per contract traded in one 30-minute candle. And why did price stop here and not go on up to the target? Remember I said you got to look left for potential obstacles? Okay, this high and the high of the opening candle, 34,514, 34,516, 34,514, 34,516. 2 points. Took it out by 2 points. Now, the Dow is the only one that doesn't have ticks. It only has points. Do I trust a new high of 2 points? Certainly not on the Dow. Okay. And then right above this, if price had gone higher, I would have expected resistance here. And I would have expected resistance here. So I would not have been looking to enter this long trade until, up here. I mean, if I didn't take it here, okay, then looking left, I know where my obstacles are. So I got to look for an area where there's no obstacles. Oh, let's say something like 34,580, 34,619. That's almost 40 points, $5 a point. That would be $200 per contract traded. So once price found resistance, now it's got to go look for support. Pullback held, but blue and Climby had gotten directly above price, which means now it's not your friend on a long trade. It's resistance. It's on its way to becoming red and falling, which is an indication for lower prices. So we get a close below the BBC. We know there's potential support at the zone. Only 3 things happen at a zone. 70% of the time, it's going to be this, consolidation. 20% of the time, it's going to be this, rejection. 10% of the time will be the slice. See how this 30-minute candle sliced through the zone like it wasn't even there? See what happened? When this slice ran out of steam, price retraced back up to the zone it sliced through and then continued in the direction of the slice, all the way down to the target. Boom, boom. Got it? Then price pulls back to the BBC. The pullback holds. It holds more often than not. So now we know that this area here could be potential support. So we want to get below that before we enter a trade. So an entry at 46 would have put you under a little pressure. Okay, chances are your 10-tick range chart wouldn't have given you the go-ahead to trade that. But we hit the target and it looks like we're going to hit it again. Now, if you're new, it's a lot. This is like, man, there's so much stuff. I can't remember all this stuff. Yes, you can. In fact, the topic of yesterday's episode was, can anybody learn how to trade? If you missed that and you're wondering if you've got what it takes to become a trader, go to youtube.com/CFRN and watch the opening of yesterday's broadcast where I discuss that very topic. The answer might surprise you. Okay. Let's go to Russell, where we had two-sided action, as was just pointed out by, I think, Ricardo. Somebody in the discussion group pointed it out. Okay, here's where the market opened. The vertical line separates today from Tuesday, Monday. See how when price drops to a zone, you get support? Rally up to a zone, resistance, support, resistance, support, resistance, support, resistance, consolidation. A leg up where you would expect resistance. Why? Just look left. Pull back. Boom. Back to the zone. Boom. Okay. So last night the market opened. We're above the BBC, so we're thinking long target. But we got to overcome red and falling. In fact, we need red and falling to turn to blue and climbing, which would make the open of this candle a beautiful entry, 1918. It took us up 8 points to the target. That's $400 per contract traded. Got to pull back, hit the target again, got to pull back, and this is the 9:30 opening candle. I don't trade from 9:30 to 10. I don't put out alerts between 9:30 and 10. Michael and Valerie, they hit the ground running right at the Wall Street Open. That's the only 30 minutes of the day that I'm not willing to trade. Again, futures trade around the clock. I'll trade in the morning, the afternoon, the evening, the middle of the night, the London Open, the Asian Open. I'll trade anytime except first 30 minutes of the Wall Street Open. Now that's just a personal preference because there's extreme volatility. It's often the largest candle of the session. I'm sure that will be eclipsed this afternoon when the announcement comes out. But on an average ordinary day, the 9:30 candle, like go back to yesterday, that's the 9:30 to 10 candle. Yeah, the 10 to 10:30 candle is just probably just as big, maybe even a little bigger. Okay, so anyway, just because I sit on my hands doesn't mean you got to sit on your hands. So we've hit the short target. Okay, looking left. See how we consolidated for 2 candles? Once we took out those lows, then you should be prepared to go short. 1906 to 1904, goal for the day, bounce away, bye. So now what? Well, this low right here could be potential support. Call that 1899. So we've already touched 1901. I would probably pass. Go look for a market that has a better setup. Now, remember, we're not teaching you how to trade a specific market. We're teaching you something far more valuable. We're teaching you how to trade. Because once you know how to trade, you can trade anything, anywhere, anytime, from any place. Incredibly crazy freedom. Once you learn how to trade, nobody can ever take that away from you. Just like you learned how to read as a child. Nobody can ever take that away from you. Unless they scramble your brains or something. You follow me? Once you learn how to trade, how to read the chart, how to identify windows of opportunity, nobody can take that from you. Except age, I guess. We're all growing older, day by day. Now that you know how to trade, you have the opportunity to earn an above average income. And the market doesn't care if you're trading from Phoenix, Arizona, or London, or the Bahamas, Fort Lauderdale, Malibu Beach, Guam. Market doesn't care. Market's the market. Where you happen to be parking yourself in a chair, well, I don't sit, I stand when I talk to you, and when I trade, and when I create alerts. They say sitting is the new smoking. I don't know about all that, but anyway. I started standing about 3 years ago, and it took a couple weeks to get used to. It seemed like my brain didn't want to engage unless I sat down. Now, my brain doesn't want to engage unless I stand up. So, and I'm able to move about, you know. I can sway my hips or, you know, shake my leg, whatever I need to do so that I don't get stove up, as they used to call it back home. All right, so the Russell two-sided action. Above the BBC, we're looking for the long target. Once price gets below the BBC, for the short target, the market delivered. In Q, here's where we opened. This is the candle the alerts came out on. Price got below blue and climbing. So now we've got resistance overhead and support below. So what do we do here? Absolutely nothing. These candles never let go of the BBC. There was no pull away. Okay? See over here, that's a pull away. This candle opened and closed below the BBC. But that didn't happen here. So the pullback held. And did it take us up to the target? It did. Now, let's say you wanted to clear previous resistance. Okay? So if you got it at 15,132, 21 points, 20 points at $20 a point, $400 per contract traded. Price pulls back to the BBC, and even though we had this candle do this, when this candle opened, it did try to go lower. Okay? And we look left, we don't see any obvious reason why I stopped there. That happens. Okay? Sometimes the market doesn't do the next high probability thing. If it did, then all those Logic 247 alerts, 14,500 plus, be 100% win rate. But that's not possible. Because despite your best analysis, sometimes the market is going to do something that you don't expect it to do. Now, did this happen during the 9:30 candle? Yep. You should be keeping a trading journal. Okay? Just journal every trade. Going back many years, I realized that 75% of my stop outs happened. Didn't matter what market. 75% of my stop outs happened between 9:30 a.m. and 10 a.m. Eastern. 75%. So, I'm not the sharpest knife in the drawer. But I said to myself, what would happen if you didn't trade during that half hour? Would 75% of your stop outs actually go away? The answer is yeah. They did. You keep a diary. Now, that 30-minute period, that might not be your Achilles heel. Your Achilles heel may be something completely different. But unless you keep a trade journal, you'll never know what your Achilles heel is. Now, I know that some people don't want to write in a journal because I have to take my eyes off the chart. Built into Windows 10 is a little app called Voice Recorder. And all you have to do is in the bottom left-hand corner of your screen where it says type here to search, type in voice. Actually, the second I hit V, it opened up this. Now, but I can't see my chart. Okay, so I got to drag it down to my other screen, of course. But when I want to talk, this is me talking. This is me talking. This is me talking about a trade I'm thinking about entering. And then once that trade's over, I pause. And then I shrink it to the toolbar. It's still open, but it's just sitting down on my toolbar. Another trade comes along, and I open that. I unpause it, and I start talking again. Okay, this is my second trade of the day. I'm looking at the NQ, blah, 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 blah. Then shrink it back to the taskbar till I need it again. Okay, now this enables you to journal your trades without ever having to take your eyes off the screen. So we're going to get rid of that excuse right there. But that's part one. Part two is really what's important. When you're done trading for the day, you are going to put your headset on, and you're going to take that voice recorder, and you're going to listen to yourself as you talk through each trade. And you're going to write down, as you're listening to yourself, the market, the time, what you were thinking, what you were feeling, reason you made the decision to go long or to go short. You're going to write it all down. Okay? So now there's something about when you hear something and actually, and don't type it. Go to the dollar store and get a 99-cent composition book and a 99-cent pack of number 2 lead pencils. Or if you're afraid of the lead, they got ink pens. Okay? There's something about hearing auditory and then writing it with your hand. It really makes it stick with you. So now you can look at your day's results and you've got all your trade results written down and you never had to take your eyes off the screen. It's an incredibly powerful tool, and it's already built into Windows 10. So you don't have to pay anything for it. You just have to use it. Do you use the same journal Michael does? How do you log your times? Gary, I'm way beyond that. I don't need to keep a trade journal anymore. This is to help people learn how to trade. I don't look at an Excel sheet or any of that. I simply look at my account balance. I look at, I can open up whatever trades were taken and what happened. I mean, all that information is saved by my trading platform. But if you're in the process of learning how to trade, then you should journal every trade. Win, lose, or draw, good, bad, or ugly. You can just write it down, or you can use the process that I just explained using the voice recorder. That's really a powerful way to do it. Because if you're just jotting it down in a journal as you're trading, you're going to be very brief. But if you're just speaking into the microphone on your headset, you can wax eloquent. As the trade's developing, you can talk about that, how you're feeling. I feel tense, I feel nervous, I feel calm, I feel peaceful. I should have probably ate something this morning, or man, I'm really glad I had something to eat before I started trading. Whatever, okay? And keep that up until you no longer need it. And as far as the whole spreadsheet thing, whatever platform you use should be able to provide you with all that information. Great question, and thank you very much for that. All right, so the NQ, boom, 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 boom. Why we stop here? Well, you have to scroll back pretty far, find the reason, but it's there. Remember, we've been climbing off the October 13th low since October 8th. So you'd have to go way back to see where the market had predefined resistance. Maybe I'll take some time tomorrow on the show and do exactly that. Now we just had a pull back to the BBC. So far, the pullback's holding. There's 10 minutes left in the life of the candle. If it closes above the BBC, then keep in mind that the step line is potential resistance. Blue and climbing is potential resistance now because it's directly above price. And if we go sideways a little bit, blue and climbing is going to turn to red and falling, like it did here. All right, crude oil. Here's where we opened last night, right at a zone, 70% of the time, consolidation. Earlier in the week, on this day, at around 4 o'clock in the afternoon Eastern, I think, I wrote in the discussion group that because it was Monday and we were so close to the lowest weekly trading zone, which was also last week's lowest weekly trading zone, that I anticipated crude would turn up and head higher. Now it did. Resistance to support, support to resistance, from resistance to support, from support to resistance. Now, see how this candle sliced through the zone? What did the next candle do? It retraced to the zone it sliced through and continued in the direction of the slice. Does that happen every single time? No. Does it happen more often than not? Yes. When the step line crossed blue and climbing, did price pull back to the BBC? Yep. Did the pullback hold? Yep. This is support times 2. When price drops to the BBC, we expect support. When price drops to a weekly zone, we expect support. What do we get? Support. However, blue and climbing turned to red and falling. So we spiked it and we spiked it, but it held as resistance. And it ultimately took us below the BBC, opening the door to trade down to the zone below. And then once we got below this right here, 69 bucks, down to 68.70, $300 contract traded. But you're only looking for 10 ticks, right? 100 bucks. So 3 days ago there. Market found support. Why? Left. Support sent us looking for resistance. Expect red and falling to be resistance until proven otherwise. Now price has managed to get below red and falling, below the step line. So does that create a window of opportunity? Yes, it does. Oh, let's say 68.90 to 68.70. That would be $200 per contract traded. Now, is there any kind of guarantee that price is going to fill that window or fill it on the first attempt? No. Is it an extremely high probability that that's what the market's going to try to do? Absolutely. See, price is always trying to break the previous swing high or the previous swing low. So it's inherent in the market that price is going to attempt to break this low. It may be able to, it may not be able to. I don't know. I just know this is a high probability, low risk window of opportunity. Now price gets below here, next potential support's here, and then the target is here. Gold opened here, had blue and climbing below support, EVC above resistance, and the zone above resistance. So we get to the zone, we consolidate, we make a little move higher. Got blue and climbing, we're above the BBC. This candle opened at 1960.7 and went to 62.7. That's $200 per contract traded in that 130-minute candle. You don't got to wait for this. It was right there. That happened at 11:30 last night, from 11:30 to midnight Eastern. And price pulled back to the zone where we found support. Got a leg, got a retracement, and again the zone held as support. And then there's that 8:30 high impact news, like a rocket ship, up to the long term. And then we consolidate at the zone. Now we pull back to the BBC. If the pullback holds, got potential resistance right here, and right here. So I wouldn't even be interested in trading gold long till we got up here. $75, $77. It's $200 per contract traded. Now, if the pullback doesn't hold, $19.64 down to $19.60, it's $400 contract traded. And now prices tried to get below the zone 1, 2, 3, 4, 5, 6, 7 times and hasn't been able to do it. But if it is able to do it, then you got potential support here at 55. So I wouldn't enter until 54. I would take my profit at 53. That's your goal for the day. So no matter what happens, if the market moves higher, we have opportunity. If the pullback fails to hold, we have opportunity. If we get below the zone, and all these potential obstacles to price dropping, we have just enough room, 54 to 53, to get our goal for the day. There's 2 minutes left in the life of this candle. So if we close and the next candle starts printing green, just keep in mind, potential resistance at the zone, potential resistance at the CFMA1, and that high, the target, which is the high of the session so far. From zone to the target, all in one candle. Crazy. Silver. Silver opened here, blue and climbing below support, resistance above. So nothing to do here. Price gets above the BBC. Okay. We look left, we see there's potential resistance there. And that's what created this mess, this consolidation. But if we wait until price gets above these predetermined resistance areas, now we look left, we have from 23.94 all the way to the zone before there's any visible resistance. Although you can see at the top of this candle, resistance, right? It only takes 2 pennies in silver to get your goal for the day. Pull back to the BBC, the pullback held. This candle right here opened at 23.97, call it 98, and ran up to 24.05. 7 pennies, $350 per contract traded. And one candle. And it continued higher. And then it didn't quite hit the target. Sometimes that happens. Price is now pulled back. Now we had a huge red candle all the way down to where we would expect there to be support. And look what happened. Boom. Price hit this area where we would expect support. And look what it's doing. It's respecting that predetermined support. See, while you can't know what's going to happen next, I don't care what anybody tells you, any website, any email, you can know with a high degree of probability what the next high probability move is. And as this red candle was coming down, we all knew this area was potential support. If it got through there, this, then this, then this, at the short target. Last market, the euro. We opened below the BBC. We had support below us. Once blue and climbing turned to red and falling. And this candle opened and closed below the BBC. This candle took us right down to the target, right down to the zone. Now, today's Wednesday. All these zones I've been pointing out, they were issued Monday morning at 6:15 a.m. Eastern. Once the zones are published for the week, they don't change. Carved in stone for the entire week. We had the perfect stack on the way up, didn't we? Until we didn't. Step line crossed, and bam. We not only pulled back to the BBC, traded through it. Pull back holes more often than not, but eventually trade through. So where's it most likely headed now? To the zone. The last place the market showed support. Got above it, and then we pulled back. See, first it was resistance, and once we got ahead above it and pulled back, it became support. So we hit the short target, hit the long target. Zone to zone, almost to the next zone. Came a little bit shy. And remember we talked about the potential for price to trade through that window? Now, this is just a few minutes ago. I hope you remember. We drew this in, traded through it, and went all the way to the short target. With the tick. Why? Why did price stop there? There's your reason. Now, again, sometimes support or resistance will show up out of nowhere for no obvious reason. There's a reason somewhere, but you don't worry yourself over that. Because we know that with our strategy, our indicators, and our zones, 80% of the time price does the next high probability thing. 20% of the time it doesn't. So we don't fret over that 20%. You know, every business has what's called a CDA. No. Well, that's what we used to call it. That cost of doing business is really, but we had a funny term. I'll just leave that alone. Every business has a cost of doing business. The Subway franchise owner, what's his cost of doing business? Rent, electricity, payroll, meats, cheeses, fresh vegetables, internet connection, and more. Okay? As a trader, what's your cost of doing business? Electricity, internet, some money in account, and the trades that get stopped. I remember when I first started trading, my accountant says, "Hey, I'm having a problem with your returns." I'm going, "Well, what's the problem?" She goes, You hardly have anything I can write off." I go, "What do you mean?" She goes, "Well, all my other clients who are making good money, they got all these business lunches and travel expenses and, she goes, you don't have any of that." I go, "Well, what do you want me to do?" She said, "Go out to dinner more often and take along your journal and talk about business. If it's even only 5 minutes, talk about business. Record it. Write down what you talked about, who you talked about it with. If you take a trip somewhere, find somebody that's interested in trading. Talk to them about it. Help them trade. Show them how to trade." She goes, and then it is a perfectly legal. She says, "Now I can't go back and claim things, but going forward, you take that journal with you." And this is before the iPhone, right? Where you could just, she says, "You take that journal everywhere you go. And everything you do that is truly a legitimate business expense, like a meal with a potential client, or, my wife and I own the business together. So if we talked about our business, then according to the IRS, that's a legitimate business expense." Friends, alas, there's two people in the world, in the universe, that you don't want to tick off. Number one's God. Number two is the IRS. Don't fabricate stuff. See, avoiding taxes via your corporate structure and other things, avoiding taxes, avoiding owing taxes is completely legal. It's the American way. That's why so many billionaires hardly pay any taxes, because they can afford the attorneys and the CPAs to create. Evading taxes, oh, that's a whole nother story. And that will get you in the slammer pretty quick. So don't do it. Not succumb to the temptation. If you owe the man, pay the man. What did Jesus say? Render unto Caesar what is Caesar's, and unto God is God's. And I am not qualified to give anybody tax advice, so don't even ask. Okay? Go to your CPA. Let them, they have a license to give you that kind of information. Okay? Gary, you're not too far. So we will do that. We will get together and we will discuss business as you are a member of the CFRN family. And we'll both write it off. Unless I just pick up the tab. So split it. Whatever you want to do. Okay. I think we've covered it all. Okay, the Fed announcement has already come out because it is now 11:12:02. Yeah, so here's what changed in the new Fed statement. Let me share that with you, then we'll do our good word for the day, and then we'll be done. Oh, this is complicated. This is a comparison of Wednesday's Federal Open Market Committee statement with the one issued after the Fed's previous policy-making meeting in May. Text removed from the May statement is in red with a horizontal line through it. Text appearing for the first time in the new statement is red and underlined. Black text appears in both statements. Did he raise the rate or not? Can somebody tell me? I've been a little tied up doing this podcast. So anyway, this is what they're talking about. It's confusing and I'm not going to take time to read it now, but I will be reading it after the show and we can talk about it tomorrow. Thank you, Michael R. He did not raise interest rates. Okay, so now coming up in 15 minutes will be the press conference where he'll get hit with the question, probably more than once, as to whether or not he plans to keep raising rates. And it may even be in that prepared statement. It may say it clearly right there. Trust me, the markets will get volatile. Oh my goodness. Just notice, look at the daily candle. Remember, we had that big green candle early on, all the way up to the new high at 44.39.5. Now look where it is. Pulled all the way back to the 38% fib extension. And what I told you to expect as support on climbing and the step line. Now, where we close the session will be very important. Okay? Your mouse at bay till the press conference is over. Market returns to its normal rhythm. If we close below when climbing, we close below the 38% fib extension, then we're probably headed back to here and here. If we somehow manage to reverse this and, close on the high of the day, then when the market's open tonight, expect a continued advance to the 62% fib extension. to become a lifetime member. Simpler than you think. Simply go to my eminifuturestrading.com. Right there, just your lifetime passport. There's no fine print. Lifetime means lifetime. No recurring fees, no upsells, no nonsense, never. It's your all access pass to everything we do, everything we've ever done, whatever we do in the future. It gives you a personal coach for life. For life, you'll have access to the live training room. For life, you'll have access to one-on-one private mentoring. Learn the indicators for life. Once you learn the strategy, nobody can take it away from you. For life, you'll get the Logic 247 alerts. For life, you'll get the concierge trade alerts. For life, you'll be able to attend the members-only workshops on Thursday night, and so much more. Everything a trader needs, all under one roof, one price. Just go here, eminifuturestrading.com. If you have any questions, call Valerie, 949-42-EMINI, or email us support@cfrn.net. Now, for the last 3 days, we've been talking about rebuilding your marriage. Again, I don't know who God's trying to reach with this message. Probably a lot of people, because 50% of marriages end in divorce, and that includes Christian marriages. But he's graced us with a fourth installment. Song of Solomon, chapter 8, verse 7. Many waters cannot quench love, nor can rivers drown it. You must be open with one another. Talked about that yesterday. You must be transparent, sensitive, responsive, and willing to trust one another. Now, this is our fourth day on rebuilding your marriage. If your marriage is on the rocks, okay, go to our YouTube channel, youtube.com/CFRN, and just fast forward to like the final 10 minutes of the broadcast. And you'll get part 1, part 2, part 3. And once today's episode's uploaded and rendered, you'll get this part. Stop and think about how you feel when the doctor is about to give you an injection. Your first reaction is to tighten up, right? Similarly, our hearts naturally tighten up after the pain of rejection, betrayal, or neglect. It's a reflex mechanism in the soul, a way we protect ourselves subconsciously. And it's a great attribute anywhere else except in marriage. If you don't turn off this mechanism, it will close off your soul. This is the state where you love the person and still come home to them every night. But you are braced, apprehensive, and no longer present in the moment. You may have closed yourself off for fear of disappointment and hurt. Marriage is an open covenant consummated by physical intimacy, which removes all barriers and celebrates the joy of having nothing between the two of you. And it's difficult to attain and maintain such intimacy. both emotionally, physically, if you have experienced betrayal and disappointment. But there's good news. The central theme of the Bible is resurrection. That which is dead can live again. So if you have lost the closeness, you can get it back if you are willing to relax your soul and open your heart towards the other person. Solomon writes, "Love flashes like fire, the brightest kind of flame. Many waters cannot quench love, nor can rivers drown it." If you seek God's help and you're willing to work at it, you can rekindle your love and rebuild your marriage. That's a good word of the day. And I said earlier there was something I was going to tell you. So let me tell you real quick. Because part of it is this, we've been talking about rebuilding the marriage. I'm so impressed with my wife. She distributes hundreds of pounds of food on a weekly basis. Not to the homeless. I'm not saying she never gives food to the homeless, but I'm talking about families that are in financial straits where, maybe there's a choice between, do we buy our medicine or do we buy some groceries? Do we pay our electric bill or do we go to the doctor? These are the people that she is helping. Now, well, you say you must be doing pretty good. You got hundreds of pounds of food to give away every week. You know how much that food costs us? Absolutely nothing. You see, she's taken the time to network with churches and food banks and pantries. She's a well-known figure. She's even got a little ID card. She goes, she spends her time and her money on gas to go to these different places to accumulate this food. She brings it home. Our kitchen is just like up to the ceiling with food. And she distributes it into smaller boxes. Some vegetables, some meat, some milk, some orange juice, some eggs. And then she contacts the people who are on her list via messenger. Got your food box. Some of them come pick it up. Others, because of their health or because they don't have a car, she goes and physically delivers to them. Now, does she get paid for this? No. Is she ever going to get an award for this? Well, not this side of eternity. But you see, what she's doing is she's storing up treasure in heaven. I'm so proud of her. After 40 years of marriage, I love her. I'm in love with her. And I would marry her again in a heartbeat. If you're not at that place in your marriage, just giving you 4 days of instructions on how to fix it. If God brought you together, trust me, it's worth fixing. And if you'll listen to Him, He will help you fix it. And that's our really good word for the day. All right, my friends, thanks so much for tuning in. Whoever you are, wherever you are, May God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.